Hey guys, welcome back to the Real Play Podcast. It's Ebony.
This is Ciera.
And we have a special guest on today. We have Aquania. Aquania, I'm not even going to try to pronounce your last name because I know I would have messed it up. But Aquania is here to talk to us about financial literacy, the importance of financial literacy, and just some things we can do to help our community regarding it. Aquania, do you want to give people a little spill on who you are?
Sure. Aquania Escarne. I'm a wealth strategist and life insurance producer who helps women and their families build generational wealth. I have been educating our community about financial literacy since, I guess 2016, I started my business. 2018, I started the blog, The Purpose of Money, on thepurposeofmoney.com. And I share wealth building stories and money tips. And then last year or January 2020, I launched the Purpose of Money podcast. And on the podcast, I share inspiring women entrepreneurship stories, and specifically stories of those who have created more freedom in their lives, or they're in transition, they're working their 9 to 5 and creating businesses that have given them more freedom in their lives, more time, more money. And I like to share those how-to tips because a lot of people want to do more and have businesses and be successful, but they're not sure how to do it. So on the Purpose of Money podcast and the purposeofmoney.com, I share tips to do both.
Nice.
That is awesome. That is awesome. I got a quick question. So, back in the day, they say like women, we don't like to deal with numbers. We don't like math. And I know finance isn't just like straight sitting. It's not a mathematician, but what made you want to go, like, when did you say, hey, I want to be like in finance? Like, I want to talk about money. When did that happen?
I've actually always liked money. I found my first.
She was like, "Girl, I
found
like
my
money.
First love in high school. My dad gave me Rich Dad Poor Dad by Robert Kiyosaki at 16, and I read it. And I really enjoyed the book. And that's when I realized I like personal finance books and I like to talk about money and I don't want to work forever. So I knew that at 16. I actually was working at a retail job that summer and decided to take my first paycheck and open a Roth individual retirement account and to start saving for retirement. And it was that decision that really distinguished me, of course, at the time from other high schoolers, because the other people I were working with, a lot of them used their paycheck to purchase clothes in the clothing store.
Right.
And I was like, no, I have bigger goals. I'm about to buy my freedom. And I'm so glad I did it because now I still have that account, that money's still growing for me. And Roth, it's like a Roth individual retirement account is it's an advantageous way to save because the money's not taxable when you do withdraw in retirement, and it can grow tax free. And it is the first way to really start building wealth because all you need to do is have a job. And you can't make too much money, but if you're making any money, you can open a Roth. So I love it. And I love that's how I started, because the other benefit is it's not limited to retirement either. So when I bought my first house, I was able to take $10,000 from it towards my down payment. And that's allowed by the IRS. And most people don't realize this is a flexible retirement account where if you do meet some of the exceptions, like buying a house, paying for education, or even having hardship, you can take money out of it. So it gives you the opportunity to start early to build wealth, to avoid taxes from Uncle Sam. But then if life happens, you still have access to this money. So you have a nest egg to help you if certain things come up.
I feel like that's even a good tip for those who are having kids now and who want to get their kids started, because it's not enough for us to be, trying to trailblaze and start a financial literacy legacy for our family. Because if it doesn't continue, then it's really no point. But if you can get your kids started and say, oh, hey, read this a little bit, or let's set you up an account and teach them the importance of money, then their thoughts and their processes when it comes to money will be different too. They won't be like most of us who were spending money on clothes and unnecessary things. I mean, clothes is necessary, but
No, I
Excessive.
get it.
The amount of clothes is not
Yeah.
necessary.
But I want to highlight something else you mentioned as far as women and money. I will say that the reason I am specifically targeting women and women of color is because traditionally women, excuse me, traditionally women do not make as much money as our male counterparts.
Right.
Equal pay is real. We still are fighting for equal pay, and Black women normally do not reach the same dollar for dollar worth until August of every year. That's when our equal pay day is, and so that means that Black women specifically are taking 8 more months into the next year before we match or meet what men are making.
Mm.
And Hispanic women are, it's even worse because their day is in October. So when you think about the fact that most women are either the head of their finances or they are single moms and the head of their household, you're asking women to build wealth on less. And most people don't know how to do that. So I really prioritize helping women because I want to show women how to maximize their income and their investment opportunities, even if they're making less than their counterparts.
And what's crazy is I'm going to talk about Black women specifically, but we're very creative. And so, though we can make anything out of less, we can do that much better with more. Um,
Right.
so, I'm so glad to be talking about this today because it's very important.
And it's real.
It is real. I want to go back to the account that you started, right? So you said that you don't need a lot and you just really need a job. So for those who are listening and they're like, hey, that sounds like something I might want to be interested in, can you kind of tell them what are the bare minimums that they need so that they can, and what do they need to bring to the table? Like, do they need to bring any documentation? Like, how can they start that for themselves now?
Excellent question. So, a Roth individual retirement account, just to give you an overview, is a retirement account that the IRS has set up and allow for you to make $6,000 in contributions if you're under the age of 50 and 7,000 if you're over the age of 50. The main requirement is that you have made income in that year. So if you're not working or you're retired, you're not eligible to contribute to a Roth. But if you are working and you've made income, you are eligible. Now, it is a really good product, but because it's so good, the Congress has also limited who can contribute. So once you're making what they call too much money. So normally a single person that's like over 134,000 a year, and married couples, I think it's 195 now, you can't contribute to Roth IRAs. But here's the hack that most people who aren't people of
Oh,
color
I like hacks.
are doing.
Okay.
So the key is you made money. So you could be a child actor, you could be working in a clothing store at 16, you could be a 25-year-old who works part-time on the weekends babysitting. You just have to have made money. It
Mhm.
is great if you have the W-2 to prove it, but if you don't make enough money for you to even file taxes, it still counts if you can prove that you made money.
Mhm.
But there's no rule that says you have to make the contributions to the Roth IRA. So some parents, some grandparents are actually depositing the money in their children and grandchildren's accounts on their behalf. As long as they don't exceed the amount of money the person made, that's still saving for their retirement, but it's not using their dollars. And I've even had some parents offer their kids incentives to save, such as promising them, okay, if you save half of your paychecks this summer, then we'll match it. So then your
Mhm.
child still, gets the full savings and extra benefits, just like an employer matches contributions, but your parents matched it or your grandparents matched it.
Wow.
And this is a great way for grandparents who are retired and they have flush with cash and don't know what to do with it. And they want to leave their existing family members money, but they're not sure how. This is it.
Mm.
Contribute to the Roth individual retirement accounts for the children and the grandchildren before it's too late, right? Because once
Mhm.
they make big bucks, they can't do it. But you can be the person who opens it, you can be the person who funds it, as long as the person made money.
That's awesome. And who knew? Yeah,
Nobody knew.
I didn't know.
I do you have any more hacks? Because I know there is so many. Like I follow a few people on Instagram, and they'll say, okay, do this, put this in your child's name, or start this early. Put your next car in a get an LLC. Put your next car in the name of the business, and all this stuff. And I'm like, all this stuff makes so much sense, but nobody's like sharing it.
Mm-hmm.
And so, what other hacks do you have, not to like try to, get over on Uncle Sam, but what are some things that other people are doing that our community, the African American community, or, even any people of color don't know about?
That's a great question. And I'm going to start out with my favorite ones because I am a life insurance producer. I'm going to give you some life insurance hacks.
Okay.
So, first and foremost, get life insurance. That is a guaranteed way to leave generational wealth.
Mm-hmm.
And life insurance is how you can buy wealth, and it could exceed what you currently have. Most people, the amount of insurance they have is not a direct correlation to how much wealth they have. It's what they want to leave behind, right? So you can purchase a very affordable $1 million policy to leave for your family in the event the worst happens, and you do not have to have $1 million in the bank.
Can I ask a question really quick?
Mm-hmm.
So years ago, I went to I won't say the name of this place, insurance company, and they were trying to tell me about insurance. And one, I wanted like the difference between term and life insurance. Two, they were telling me like you can put so much money in, but after a while you wouldn't be able to. It's like basically your insurance disappears. Like I think term is that. Am I talking about it incorrectly?
No, you're on the right track. You're saying some of the right things, but I can definitely help you remember it better if you want
Okay.
me to give you.
Yes.
Here's a hack to help you remember. So, term life insurance is temporary and it's similar to an apartment lease. You are creating a contract between you and the insurance company that says, if I die, you're going to pay this money to my family. But you're buying a lease for a certain amount of time. It could be as short as 1 year. It can be as long as 30 years. And it's normally in 1 year, 5 year, 10, 15, 20, and then 30-year increments. Okay. And what you're basically doing is for a really good price, you're getting the most coverage, you're getting the bang for your buck, but you're also only getting it for the time that you sign the contract for. And the reason I say it's equivalent to an apartment lease is because, yes, once the lease is up, so is the insurance. You're no longer covered for insurance. If you haven't died, congratulations, you're still alive, but your family gets nothing and you don't get anything back either. But for families on a budget or who need more, $1 million or $2 million in coverage because they want to cover a lot of things for their family, that is the most affordable way to do it. Permanent life insurance is the alternative to term. Permanent life insurance, it covers you for the rest of your life. And it's similar to that house or mortgage. When you invest in permanent life insurance, you're supposed to basically have it forever. It is the ultimate insurance to cover your needs, and it can cover you for beyond 30 years because you've paid for a contract that says, whenever I die, you're going to pay this money to my family. But the other cool thing about permanent insurance is that when you make payments, a portion of your payment kind of goes into a cash bucket and it earns interest. And in a lot of cases, depending on the company, that interest rate could be much, much higher than a regular bank account. So some of the companies I work with, for example, in a good year when the market does well and they have good returns in the market, they will pay dividends or interest to their policyholders up to 11.5%. But if it's a bad market year like 2008 and they've suffered losses, they'll pay you zero. But the money is a safe haven in that it's not in the market, so it's not volatile to the market. It has the potential to earn more interest, but in a bad year earns zero interest, but you don't lose any money. So your cash bucket doesn't lose any money, and then it has the potential to earn interest. Why this is not always the best solution for everyone is because it is more expensive to buy permanent life insurance. And the reason is because the insurance company is guaranteeing to pay out. We're all going to die. We know that. And they're guaranteed to pay it. Whereas term life insurance, statistically, they only pay out 1 to 2% of the policies. So most of the money ends up with the insurance company and not with your family because you don't die within a term. So those are
Mm.
money makers for insurance companies, but that doesn't mean they're not the best solution if you have a tight budget and you need a lot of insurance. Okay.
Another question. I
Mhm.
think I remember, is whole life and permanent life insurance the same thing?
No.
Okay. I
Permanent
think they
life.
were trying to get me to get whole life.
Well, I want to clarify. Permanent life insurance covers you for the rest of your life. Whole life insurance is a type of permanent life insurance, but there's
Okay.
more than one type. A lot of people say whole life insurance instead of permanent because that's what someone's tried to sell them or what they know. But there are other types. There's index universal life, there's variable life insurance, and then there's whole life insurance. And those three products have different benefits and different ways they make money. For example, a variable life insurance product is invested in the stock market and has the potential to make more than the interest rates I said before, but it's also volatile to the market.
Yeah.
So some people don't like to get variable because they don't want the ups and downs in their cash value. They want a steady way to know how much are they going to have. Universal life is the one that pays interest, but in bad years it'll get zero. In good years it'll get more. And then whole life insurance can tend, for me, I've noticed it's more expensive than the other two options. It still covers you for the rest of your life, but it can be more expensive. And I don't really see the point in paying more money for the same death benefit. At the end of the day, you're paying for a product that pays your family if you die. But it is nice to have access to I call it a family bank or a cash bucket that you can use for other things. You can use it while you're alive. You can use it to supplement your retirement. You can use it to be your own bank and get loans from yourself instead of loans from banks, right?
Mm.
I've even used life insurance, the cash value in life insurance to invest in real estate. So I was able to do a significant down payment on a rental and a home purchase because I had cash in my policies. So, talk about life hacks. That's a huge one because rather than saving or borrowing from our retirement, like most people of color do when they need a house, I was able to borrow from life insurance. And you're not always required to pay the money that you take out back.
Oh wow, I
I
didn't know
just want to
that.
say really quickly, this is why it's so important. For what you're doing is so important because like 9 times out of 10, a lot of us didn't grow up learning this information. It's just like you literally have to be self-taught or someone teaches you. Otherwise, all of these things that really could help us as the Black community, one of the poorest communities, we could be generating so much financial wealth and be in a better place. One, you have to be in a headspace to want to make those changes, but also you have to know the information. If you're not informed, then there's nothing you can do. So thank you because that's very important. I do want to talk about, and if Ciera doesn't have a question on insurance or something else,
I did have a question, but it wasn't on insurance.
okay.
Can you clarify if where the brown dollar stands? Because we're really not poor, right?
I think it depends on how you are going to look at it. I think Black people have the power to impact the economy. When we don't like something and we protest against it, it does cripple businesses. But the same way we can cripple businesses, we can build up our own. We can support each other. We can invest in our own businesses where we're providing just as good products and services. Okay. And we're also supporting a business owned by a person of color. I think what we don't always give ourselves credit for is that we do have good business owners. Now, whether you're black, white, green, or yellow, service is important. Quality products are important. Delivering when you say you're going to deliver is important. And I think we all need to give a new business the benefit of the doubt that they're going to provide those top services until they prove otherwise,
Right.
right? And so in my business, as a business owner, I do have the opportunity to choose who I work with. And I choose to work with female entrepreneurs, other people of color, whenever possible. I'm always asking for referrals, and I think we should be asking that. Who do you know that already does this that I can work with, or at least consider working with? I am coming from my professional career was contracting, so I'm always going to
Oh,
get 3 bids. I'm always going to shop around. But I think that when you're shopping around, you should include businesses of color in the applicant pool. Why not? They just as capable as providing the service of the need. And that's how we're going to really make a difference when we continue to support other businesses owned by women and people of color.
Makes sense.
that's interesting. I'm actually in contracting. That is my career. So I'm like, oh. So yes, we try to go to small businesses for a lot of the things. We try not to always go to the big, Boeings and,
Mm-hmm.
companies like that. But I do know that there is kind of like I don't want to call it a stigma. I don't know the right word to use for it, but sometimes you're like, okay, Black businesses, small businesses, they're going to give you poor customer service or they're going to be late with their deliveries. I'd rather just go here. And it's bad because sometimes, you may have one bad, you know, thing with one company and the next thing you know, you don't want to mess with any small Black businesses. But there's a lot of them out there, Black and brown. There's a lot of them out there that can really provide stellar customer service and products. So we have to kind of retrain our thinking and keep the money in our community like others keep the money in their community.
I agree with
Absolutely.
that.
Mm-hmm.
Okay, so I think Ebony, you were going to go a different direction. I do have a question dealing from a single mother. I don't know if you guys want to jump
Yeah,
in with that.
go
Okay,
for it.
so to summarize it, she is a single mother. She's been a single mother for a couple of years with a toddler, and she's trying to build wealth for herself and for her child, but there's not a lot of extra money. So, what can she do in order to at least get started?
So I think the first thing they do is to do a financial analysis of where your money's going. And I'm not saying that to say she doesn't know or not
Yeah.
aware, but most people aren't. I'm not going to generalize. I work with a lot of clients every day, and I start with the financial analysis because most people, when I ask them, what are your monthly expenses, they can't tell me, or they don't have exact read on how much they're spending, and they maybe have money going out the door because they're not paying attention to the small purchases they're making that is adding up to be a significant portion of the limited income they have. So I would first track your spending and see where all your money's going and use that as a baseline to build a budget that works for you. And if you see that a lot of your money is going to processed foods or
Food.
eating out
Last
or
minute, yeah.
late fees because you may be missing bills, right? You're not paying them on time or you're forgetting when they're due. Those are easy things to fix, right? Start cooking at home more, do meal planning, do your own grocery shopping, and try to avoid that last minute rush to get food. And then you're spending, one eating out is equivalent to a week of groceries, depending on your family size,
Right.
right? The other thing is save whatever you can. And a lot of times I use apps to help women figure out this number. So Acorns, Digit, and Capital with a Q, QAP. ITAL. These are apps that will help you save your change. So you're starting out with just rounding up your purchases. If you go to the store, you spend 50 cents on a soda, the apps will take 50 cents out of your bank account and put it into a savings account for you. And they all kind of do an algorithm that helps you take only money you can afford to save so you don't experience overdraft fees. And I found that some women will save $30, $40 a month just in change. And this is money they never saved before because they didn't know that it was possible or they didn't see it because they weren't tracking closely. And so now the technology is doing that for you. And the other thing I would say is look at what you have and try as small as you can to start. So personally deciding to save 5, 10, $25 a week, do that on a regular basis. If you find that you have to dip into the savings you've been saving, then you might need to lower what you're saving because it's too aggressive. But if you realize that you're not missing the money, then that's a sign that you could be saving more. And that's probably where you need to start. So those are just some ways to create a savings, because single moms need emergency funds more than anything else. And a lot of times they don't have one. So an unexpected bill, a car repair, a loss of income wrecks your budget. And rather than going to payday loans or predatory lenders or credit cards, we want to start building our savings accounts so we have at least $500 saved for an emergency. And then once you get to 500, try to shoot for 1,000. But a lot of times people don't know what they're spending. And that's where you really need to start. And once you look really hard at those numbers, you can find the leaky ships, the leaky purchases that are really messing with your budget.
Question, since you talked about that, we hear a lot from Dave Ramsey, like, be aggressive when it comes to saving. Do you believe in that? Just because that cuts the fun and, sucks the fun out of life. You can't do anything.
I'm not the strongest follower of Dave Ramsey beyond the baby steps. So let me start there. I do believe he gives a great foundation to help people get their finances in order. If they need guidance, if they need direction, get the savings, try to minimize your debt, pay off debt you have, and really maximize your income and how you save with your job. But when it comes to leveling up, I think Dave Ramsey's not providing enough guidance that helps families get to the next level in their finances. But I do believe saving is important. But I think that you can save, invest, pay off debt, and still have vacations at the same time. I'm not a financial coach that wants to deprive my clients of anything. I believe in value-based spending. So if vacations are important to you, we should save for those. If you really want certain material things because you value those, we need to budget for them, and then we have to cut out somewhere else. So there has to be a give or take. You can't have all of it, but you definitely can contribute to all of it at the same time. And I don't believe that you should not be saving for retirement or even for emergencies until you get out of debt, because for some people, that's going to take too long. And you can't wait until you're 50 years old to start saving for retirement. You'll never retire. So there has to be a balance, and it has to be a rational approach to how you do it all. So my biggest thing is have a life, because we only live one life. So have a life where you do have fun, but don't forget that you need to be able to eat the next day. Right. So
I think people do forget that.
So let's be realistic. So I'm definitely one of those financial coaches. When I talk to my clients, I'm like, look, I'm not going to tell you that you can't have a nice bag every now and again, but in order to have that nice bag, what are you willing to sacrifice in other areas? So for example, I'm not really big on name brand foods. I don't have to have certain things in my closet, but I love vacations. So I'm going to take my family on a vacation every quarter. I'm going to save for vacations every paycheck. So I have a vacation fund. I'm making a deposit every time I get paid. And that's how I prioritize the things that I really want in life.
I feel that. I love a good vacation now. And I can get off-brand food, off-brand clothes. I was talking to my friend the other day, and she was talking about she likes Coach purses. I was like, you know where I get mine from? The Burlington, the Ross.
Yes.
Like, I don't care, because it's not a priority for me to have like these labels, but I do like to get on a plane, not right now because I'm still a little nervous with COVID, but I used to be everywhere. You tell me, you know what I'm saying? Like, I was everywhere. So I like how you set aside them, and that's probably one thing I should do. I don't set aside money just for vacations. Like, it all just goes into my different bank accounts, but it's just me. So I already know, like, hey, I'm going to pull from here when it's time to go, but maybe I should have a different account that's specifically for vacations and specifically for other things, so it doesn't get all mixed in with everything.
That's exactly what I do. And I don't spend more than the vacation fund has. So once I have money in the vacation fund to cover the flights or to cover the hotel, then that's when I make the bookings. And that's when when I get back, because when you're overseas, I don't recommend you use debit cards because it could be fraud or other issues. So you use a credit card for your transactions when you're overseas, but you don't want to come back to a bill. So you go to your vacation fund
and just pay
it off.
Right.
And then you have less stress. So you went on vacation and then you don't have to stress about the vacation or even keep paying for it well after you've gone.
I like that.
Have a bank account set up for vacation. I don't anymore, but I need to get to that. Full transparent moment. I am working with Aquania on some finances. And one thing I did notice is that I would talk, the last time we met, I would talk about like, you would ask me like, how much do you spend for hair, or how much do you spend for this or that? And I would give you a number, but then I would be like, what is she gonna say? And then you'd be like, okay, move to the next one. Okay. Like you didn't, I was expecting you to be like, girl, why are you spending this much money on X, Y, and Z? But you're like, no, you got to live. So it's, she was like, that is not even that bad. Like I've seen worse.
Yep. No judgment. No judgment. Now, I will say, you know, for example, one time I met with a client and they told me, oh, I spend $100 a month on Uber. And I was like, really? And I said, send me your bank statement. And they sent me their bank statement, and I took a highlighter and I highlighted all the times they took Uber. They were spending $400 a month on Uber. And this is what I mean when I'm like, so you said
just
you
Uber
100, but you're really spending $4. That's a car note. In addition to, they had a car. I was like, so why are you doing this? It was pure like unaware of what they're spending, because every time they did it, it was $5, $7. So in their mind, they were like, I'm only taking these $5 trips and I'm normally doing it, you know, from the metro to my apartment, or, you know, from the mall to this location because it's too hot to walk. And I was like, well, that's fine. But just know that you're not spending $100 a month on Uber. You're spending $400. And those $5 and $7 purchases are adding up. And if that's not what you want to be doing, then we need to course correct. So that's all. You want to spend money on hair and nails, that's fine. But be aware that's what you're spending.
That's what you're spending.
But then Uber, like, you said she has a car. What?
Yeah.
I don't know.
It's, you know, some people.
But sometimes, like, if you go into,
sometimes when you live in a city, because I will say they live in the city, and you know, you can't always drive and find parking. Right. So it was like, keep the car parked and take the Uber to these certain locations.
That's
okay, I won't lie, because when I first moved here, like when I go to the city and I plan on staying out late, I might take an Uber instead of, it's a lot to drive in the city. So I'm like, let me take an Uber. But then that's like $25 just one way, and then I come back home. So the people try to ask me to go out the next day. I'm like, I already spent $50 on Uber. It's okay.
Right. Oh my goodness.
And that's before I even go out to eat, you know.
Yeah, that's about to say, that's not even thinking about like the drinks, the food, if there's a cover to get into wherever you're going, if you're going to the movies. Like, there's been times where I've been in DC and I'm like, okay, my car's parked. Where are we going next? All right, Uber, because I'm not losing my spot, because it took you an hour just to even find a spot. So I see how, you know, you're gonna do what you got to do to enjoy your life, but you shouldn't go overboard, and you should recognize. And that's the thing, like, those little things do add up. Like they say, the coffee, you may go to McDonald's and get a coffee for $1.25 every day, but when you start multiplying that by years, you spend a lot of money on coffee when you can just be at home pressing the little Keurig button or whatever system you have, Mr. Coffee.
I don't even drink coffee. Well, now I drink coffee a lot, but during the pandemic, I picked up, like, I like the experience of making coffee in the morning, right? And so I would go to Starbucks and I'm like, I spend a lot of money on Starbucks. Let me get me a coffee machine. And I got an espresso. Granted, I didn't need an espresso machine because it's expensive, but I was like, for the cost that I was paying for Starbucks and getting an espresso machine,
might as well.
It was worth it, yeah.
You make espressos at home? Mm-hmm. Okay, fancy.
Nah, I won't say. I've been to Starbucks at least once, twice.
This week?
I got it.
Oh, since you got it. Mm-hmm. Well, that's good. You cut back a lot.
Yeah.
And that money is paying for the machine. But yeah, there's so many. Good. Do you have any more hacks? Because I know you was in the middle of your hacks earlier.
So we did insurance hacks. Talked about the saving for retirement hacks.
You know what I want to talk about?
What?
I wasn't going to talk about it because I was like, I probably want you to come on for another episode to get more into detail. But you know how every time we talk about real estate, I get so excited when you talk about hotels, because I'm like, Who owns
Yes,
a hotel?
I do.
Mhm.
Yeah. So there's no hack. Well, there are a few. Hack to owning a hotel. First of all, is savings. So you gotta save. You have to invest in order to have the capital, because hotel ownership is capital intensive. But once you have that down, one of the ways that I invested in a hotel and avoided taxes, fees, and penalties to do it is I took some of my retirement assets in an employer account, and I used a special account that I have access to called a EQRP. It's a solo 401k for anyone who's an entrepreneur or anyone who wants to invest in real estate. You open this account and you can invest in your own investments, but the solo 401k is still defined as a retirement account. So I was able to take money from an account I don't have control over because my job invested the way they want to, and I put it into another retirement account that I do have control over. And then I invested directly in a hotel. And I love this because now a portion of my retirement, I got to decide what it's invested in, what it's doing, and I got to control the returns because I basically invested in a hotel where they gave me a projected return on my money and I was happy with the numbers. And I decided, this is another way I want to build wealth. So you can definitely do things like this, but I will say, meet with the professional, make sure that what you're taking from one retirement account to another is you can afford to do it, and it's not a majority of your retirement savings, because you still do need to retire.
Right.
And you want to make sure that you have a majority of your money that's in more stable option for you. And then for me, real estate has proven to be very successful for a lot of entrepreneurs, but this is money that, God forbid it happen, I could afford to lose. So that's kind of where you have to make calculated decisions and really, really take a hard look at your finances.
And when you get a return on your investment, you can put that money back
Yep.
in
You
that
can
account.
put it back into any of the retirement accounts I have, actually. You just roll it over. So, yes, I can do that.
It's awesome because it makes me think about like franchises too. Like somebody may want to go buy a Chick-fil-A or have a
Yes.
couple of homes.
So everyone assumes, I just did a workshop on franchise ownership, actually. And one of the things that I really like to remind people is it's not always about food franchises. There's a lot of educational franchises, tutoring programs, and most parents are going to continue to put their kids in tutoring programs, especially now because they're struggling in virtual school or they're not keeping up with other peers. So you can do all kinds of franchises. Some of them require brick and mortar, some of them do not. And I think that you can find a franchise that meets your needs and is something that you're interested in, if you're
Nice.
interested in franchise ownership. But you could also consider franchising your business. We always think about owning a business that has a blueprint, but what if your business is the blueprint and there are other people who would be willing to recreate your business in their hometown, and then you are a franchise owner and they're a franchisee? So definitely consider both sides of that income opportunity.
I like the way that sounds because I don't want to work. I'm tired of working, and to even think about like having something and franchising it out, and then eventually I'm just sitting back while people are bringing in the money for me. Oh, that just sounds
And that's
amazing.
a good point about business too, because a lot of times entrepreneurs want to be everything in their business for an extended period of time. But once you start, it's kind of hard to back out and then say, oh, well, I'm 40. I want to go relax on the beach and do nothing for 2 weeks. But I'm so in my business that I don't, you know,
Mm-hmm.
I don't want to.
But that's a good point too. Not all business owners are in their business. You're supposed to run your business. Your business isn't supposed to run you. And I do think that a lot of solo entrepreneurs, the one mistake they make is they think that it's all about the hustle and grind. Don't get me wrong, there's work that needs to be done, but it doesn't all have to be done by you. And that's a big lesson that I learned from my mom. My mom was an entrepreneur most of my childhood. And then she had side hustles. She's in accounting background. So she used to work for the IRS during tax season. She sold ATM machines. She had life insurance. So she had a lot of different ways to make money. But my mom was always the only one making money. She never really hired anyone except me to work in her company. And I think it limited her growth. Whereas I've gotten to the point where I'm like, look, I want to spend time with my family. I want to be able to take vacations. So I cannot always be in my business. And so I've hired teams of, 1099 employees in most cases, but people with skill sets to do things that I don't want to do, but I know needs to get done. And I think that's the key. And because you hire someone to handle the things you don't want to do, you have more time to do the things you do want to do that generates you money. So
Yes.
there's different ways to approach entrepreneurship. I do work hard, but I'm not going to be the person who always has to be working in my business.
That is good. I love that you said that, because a lot of people think, okay, I'm an entrepreneur, I've got to work 27 hours a day. And you don't. You know what I'm saying? You can start to, if you know you're good at something, but you can outsource something else, you can do that and still keep your own peace of mind and still keep your business. So
Exactly.
that's important.
That is very important, because you don't want to go from working for a corporation or a business and working all these hours to going to be an entrepreneur and sometimes you have to, but if you don't, doing the same thing and being burned out. So
Right.
the point is to create that lifestyle that you want to live.
Exactly.
Yeah. Got to get there though. Got to get there.
I know. You'll get there.
Yeah.
Piece by piece. One new stream of income at a time.
Which I wanted to talk about next. So thank you.
Okay.
Multiple streams of income. How important is that? Because with one stream of income, I can save, I can try to move my money around, but if I'm not bringing in extra money, I can't do a ton.
Right. You're kind of stuck.
Mm-hmm.
I remember seeing a meme that said, you're with one stream, you're one paycheck away from being broke. I was like, that's real. Like when you think about it, you might have something in the bank, but once that's dried up.
And if something happens and you lose your job and they say, hey, this is it, you better hope you saved enough to where you can make it to the next job.
So you answered your own question. You can't just have one stream of income if you really want to build wealth or even have the ability to weather a storm. Emergency funds are great, but not everyone has one. And $500 is normally all it takes to wreck a middle income American family. Wow. So I definitely think you need it. I think even COVID has shown us you cannot survive off of one stream of income because so many people lost their jobs when no one went outside to play. So just that alone, if you're in certain industries, you're now non-essential, you're not making money, you're laid off, you're getting unemployment's running out, you haven't found another job. And for anyone who was just relying on that one paycheck, they are one paycheck away from being broke. So one thing I do want to say, though, is that entrepreneurship's not for everybody. And I don't want anyone to think, well, I have to have a side hustle, I have to have a business, or I'm just hopeless. No, there are plenty of investors out there who have cash, who invested in other things, and they are what we call passive investors. They're putting their money into something that's going to return a certain amount of interest every year or dividend payments or some type of benefit to them in cash flow that makes the investment worthwhile, and they're not having to do the work. So if you're like, I don't want to sell my services or my soul to try to do something, then you are probably someone who needs to be investing in the stock market, getting returns, dividend payments on certain stocks, or you need to be thinking about how can you allocate some of the money you have to projects that'll make more money and create income that way. So multiple streams of income can very well be the interest you're earning on your bank accounts or the interest you're earning on your stocks. It could also be the income you're earning on selling someone else's products. Affiliate marketing and selling someone else's successful products is a great way to make money. And that person has done all the work by creating a business that's worth buying, right? Or buying the product for. I freelance write. I have a podcast that sells ad space. I have life insurance. I do financial coaching. I have a 9-to-5 job. Those are in real estate, right? And whatever cash flow I make off of rental income and hotel investing. So that's like 7 income streams. They don't all flow at the same time. I'm not going to pretend that I'm so flushed. I don't know what to do with my money.
About to say, hand me some, sis.
You know? But at least when I don't want to write, because I'll give you real talk. Last year, I did freelance writing for over 4 clients, but I decided this year to focus on my own business, and I fired all my freelance clients. I literally was like, I am getting rid of an income stream because I want to spend more of my effort and time building my own business. And then 3 months into this year, one of my old clients came back and was like, I really miss you writing for me. I need you back. And I said, okay, I'll come back, but this is the minimum that I'm going to charge because now it's about my business. And if I'm going to give you an hour of my time for my business, I need a minimum amount of money to do it. And I literally like tripled the rate that I used to charge.
Yeah.
The person knew my value and they were like, I'm going to make this investment because I like working with you. And I was like, great, I'll bring back freelance writing, but I want to make the same amount of money off of one client as I did off of 4. So this is how this is going to have to work for me. And if somebody can't do it, then they're just going to say no to that.
Right.
Like, I can't pay that. I'm sorry. We can't work together. That's fine. I didn't want this anyway, you know, but
you
if
came
you
to me.
right. If you want to work with me, this is what it's going to cost. So the other thing is like, if you're going to freelance, if you're going to be an entrepreneur, know your worth, set your prices, charge what you feel you're worth. Not everybody is meant to be your client or your customer. Period.
Yes. And
Point blank, period.
We were talking about outside. I just want to say that I saw this meme that said outside costs $150 an hour. And it does. Soon as you step outside, I feel like everything's expensive.
Yeah. And look at how much money I've been able to make sitting inside my house, because now I don't have to travel to speaking engagements. I don't have to go to my office in DC to meet with clients. I've just found other ways to pivot. And that's another thing is, even if you are an entrepreneur and your only stream of income is your business, you have to have multiple streams of income as a business owner too, because you got to be able to pivot. When outside says we shut down and you can't congregate, then you need to have a virtual platform, or you need to have digital products that somebody's buying when you're sleeping, your book, your course, things like that.
We did get a question. We talked about investing. We kind of talked about plans for retirement. They asked about Bitcoins and Doge coins. I haven't heard about Doge coins.
So I do not profess to be an expert in cryptocurrency at all. I'm actually in the process of looking for a female who is knowledgeable on the subject because I want her to be on my podcast. So if you're listening and you want to hit me up at thepurposeofmoney.com, let me know, because I am looking for someone. But I will say I do have a little bit of Bitcoin. I'm investing in it with the amount of money that I'm willing to lose, because I do realize there is a lot of benefit in the concept of blockchain technology. It definitely is the wave going forward, but it's still a lot of uncharted waters as far as regulations are concerned and what countries are willing to do. For example, China just basically said you cannot use cryptocurrency trading or cryptocurrency payments in China because they don't want the banks to facilitate those transactions. China's huge. China's a huge country in our market and our global economy. And that was a huge hit to a correlation that happened was Bitcoin dropped in price like the same day the announcement came out. The two are not directly related in that, you know, Bitcoin's performance is based on the supply and demand of Bitcoin, but it definitely is also based on the perception of the value of it, right? And if you feel that China has such a large portion of the market that their announcement is going to impact trading, then you may now think it's not worth as much, right? And that's why it dropped in value. I don't know what's going to happen in the long run, but I think that every country is figuring it out as they go. And China's just one of them. So it's nothing you can do when a country decides that they're going to have a policy and this is the policy. But it definitely, I've had some others who are more knowledgeable on Bitcoin say that it could be the way that people of color eliminate the wealth gap. If we get in now and we understand and we invest enough in Bitcoin that we become, not even just Bitcoin, but cryptocurrency as a whole, that could be the way we build wealth.
One thing I want to talk about too, you talked about us as the Black community being trendsetters and how when we hop on something, it goes that much further. So you remember Clubhouse, the app just came out not too long ago. We all hopped on and now it exploded. I don't know if a ton of people are still using it as much, but it exploded. I guess my question is, how can we use that to be our leverage? Because a lot of times we jump on these things and we give people free publicity, free time, and we never say like, I should be getting paid for, I mean, people are getting paid off of Clubhouse now, but at first nobody's like, I should be getting paid for the amount of time that I'm spending promoting someone else's business.
I think you nailed it. You just need to decide what it is you want to get out of the platform and make it work for you. And I know plenty of people on Clubhouse who, as initial user, got on, promoted their own products, their businesses, their services, and what they could do. And they sold things on Clubhouse. I mean, I bought a course from a Clubhouse room that I went to, and the person was promoting what they were doing. And I said, it sounds like a great idea. Let me buy it. So I think that's what you have to do, is just be very clear on what your objective is and who you are supporting, whether it's your own brand or the other person's product, and use that to your advantage. There were no rules on Clubhouse that said you couldn't do that. And that's why people did it, right? I get on Clubhouse, I'm going to have a room about life insurance, and then I'm going to talk about how I sell life insurance, and come work with me. There's nothing wrong with that. Now, if you choose not to promote yourself or your business in that way, that's your choice. But people do it, just like people use Instagram and Facebook to do the same thing. What I would say though is you still kind of need your own platform, because at any point that platform shuts down, that is your business, right? So I have my own website. I'm not depending on Facebook to be the only way that I promote my services or products, because Facebook could close my account or block me one day because they want to. So you still need to have a way in which you are communicating to the public about your digital platform, which is your website, and what it is that you can do for them. But I would be an initial user. I'd try it out. I mean, don't be afraid to be silly or to even make fun of yourself until you figure out how to use it correctly, right? Like, I started reels on Instagram. I know my original reels were silly and probably not that fancy, but reels increase your reach. So why not take advantage of an opportunity to increase my exposure to potential clients, to potential women who can benefit from the information I'm sharing?
I think that's good. It's more about mindset, shifting your mindset to promote your business, and then not being afraid to try something new.
Exactly.
That's good. I think this has been a great episode. Ciera, do you have any additional questions or?
Well, since I know we're going to be wrapping up really soon, my last question would be, if you could tell a woman, give her any advice, like the first thing that she needs to do, or the biggest thing, what's one thing that you haven't said yet? How about that? What's one thing that you haven't said yet that is on your heart to let our listeners, which we do have, half men, half women. It's like our listeners is right, literally 51-49%, just like that. But for the listeners, that the target that you're going for, what's something you want them to hear?
I think that you just need to understand that we're all worthy of wealth and we all are capable of building wealth. We just need the roadmap. So definitely follow those who have successfully done it. Read the books of mentors that maybe you can't actually meet that person, but you definitely admire the strides that they've done, and read it, learn it, listen, check out podcasts, find the medium that works for you and your ability to learn and process info, because you don't want to be left behind. And so for me, I've progressively increased how I reach people. I'm on Instagram at The Purpose of Money. I have my website, thepurposeofmoney.com. I'm also on Facebook and Twitter, But then I just launched a course, the Purpose of Money Masterclass. It's a Finances 101 course, and it teaches you the basics of saving, investing, building wealth, multiple streams of income, and protecting the wealth you've built. I provided this course to really help women and men, if they want to, learn the basics so that they can get to the next level and invest in hotels and invest in real estate. The one thing I will say is, for me, the foundation was key. I started out as a retail associate in a clothing store with a $250 check that I put into a retirement account. I didn't start out with money to invest in hotels. So don't try to focus on the end game when you know that there's steps you need to take before.
Right.
I think that's good.
Can you tell them again how to, for the course that you just started, can you tell them, like, if they're interested in finding out more, do they just go to your website to get to the course?
Yes. Or you can go to finances.thepurposeofmoney.com, finances.thepurposeofmoney.com. You'll see the course. It'll tell you more about the 6 modules. And if you use the code FIRST10, FIRST10, you'll save $150 off right now, but that is limited. So please check it out now.
We like exclusive and coupons.
Yes. So that's all that I really had. I really do appreciate you coming on, and more than you just coming on and talking to us about finance, I appreciate what you're doing in the community for our people, for women. Just being a model of success is a big deal, and I just love it. So thank you for what you do.
Welcome.
And I'm sure Ebony said that she probably would want you to come on and talk about something that she didn't bring up.
It was more about real estate, more on real estate, or any questions that anyone has. I also already said thank you, but also for being personable. Like, when I first reached out to you, I was like, there's no way she's even gonna write me back. But Aquania has been so helpful to me so far. Like, I feel like low-key she's a mentor, because even when we talk about, finances, she still helps me with business stuff on the side too, and doesn't say, oh girl, like, I know, but I ain't gonna tell you nothing. Like, she's a wealth of knowledge, and thank you.
You're welcome. I think there's enough money around for everyone to eat. So let's get it.
Let's go. I like it. I like it. So thank you, listeners, for tuning in for another episode of the Real Play Podcast. If you want to reach us, you know how to get to us. We are located at the Real Play Podcast on Instagram, or the Real Play Podcast at gmail.com. You can reach me at Raven with 2 N's, Raven with Love, and
Ebony D. Johnson.
And that's it.
I always mess up because I always want to say Ebony D as in David Johnson, but I'm trying to be. That's it.
And our guest, you can reach her again at
the Purpose of Money on Instagram, at purpose_money on Twitter. Check me out, or thepurposeofmoney.com on my website. You can connect with me directly and set up a free consultation.
She is a wealth of knowledge. I've already heard about an hour of it, but just imagine if you were to link up with her one-on-one and get your finances in order. Let's do that in 2021, okay? Let's get our finances in order. Let's start in 2021. I'm not saying it's got to be done, but let's get it started. So thank you guys, and we will check you out on the next episode.
All right, guys. Bye.
Bye.